Investors presentation for Doha Bank for the year 2020. We're going to discuss the macroeconomic update, Doha Bank overview, operational and financial highlights, question answers for analysts. All this are going to be discussed in this presentation. Now, let's look at the Qatar state budget. That's very important. The banking business is driven by predominantly government expenditure. So revenue is anticipated to reach 160 billion based on average oil price of $40. The expenditure is estimated at 194 billion. The budget deficit is estimated around 35 billion. Oil price 40? No. The average, in my opinion, it will be around 50 to 55. We are seeing the semblance of it in the current context. Brent is quoting around 61 and US crude is around 58. So 72 billion will be allocated for major projects. The state continues to work on general projects as per the national development strategy and the plans. The budget continues to focus on spending on infrastructure projects, housing projects for nationals, healthcare, education, transport, communications, stadiums, specifics to 2022. Qatar 2020 deficit can be compensated by debt issuance, and that's the importance of it. If you look at the sector allocation, defense and security is around 22%, public finance is around 21%, municipality and environment is around 13%, education is around 9%, health is around 9%, culture and sports is 6%, transportation and communications is around 6%, and the miscellaneous sectors is around 14%. So overall, if you look at the big picture, there's a right judicious allocation. Qatar's stable economic situation, sovereign rating is around AA by Moody's, maintained ratings with stable outlook. Gas reserves are there, third largest reserves of gas, totaling around 24.7 trillion cubic meters. Oil reserves, 25.2 billion barrels of proven oil reserves, and we have hydrocarbon growth 3.5% and non-hydrocarbon growth of 1% for this year. Projected GDP growth is around 2.2% to 2.5%. Inflation 2.1%. Now population 2.7 million. GDP per capita is around 91,900 for last year. The government fiscal position, there's a deficit of 35 billion which will be offset by additional borrowings. A significant future government and infrastructure spending is going to be the most important aspect. Government surplus or deficit depending upon the oil price outcome. Government revenues, if you look at 2020, we had nearly 39 billion has come out of the miscellaneous revenues. Oil and gas produced 132 billion Qatar Riyal. So it's a good situation, a sustainable situation, and major projects in 2021 are around 72 billion to over $20 billion. Major sectors, now 21 billion for municipality environment, 17 billion for defense and security, 7.4 transportation and communications, now 4 billion for sports and culture, 1.6 billion for education, and 1.3 billion for health. That's very important. And when it comes to estimated project value, Ashghal will get around 48 billion. Now 6.4 billion other entities, Hamad Medical, you will get Ministry of Municipality and Environment, Transportation and Communication. All these are going to be a recipient of the various projects. Third largest gas reserves, second largest exporter of natural gas, that's the value advantage. A development composition of the oil and non-oil is spread in diversity in total terms for various sectors. As far as COVID-19 is concerned, support program Qatar government has given State of Qatar has focused on supporting the financial institutions without disrupting the business they want us to support. We have done it. 75 billion Qatar Riyal, 20 billion, over $20.5 billion. That's the focus. Deferral on the loan installments for the affected sectors. We also have maximum rates to be charged is 2.5%, zero cost repo facilities, and the QCB support program as detailed above. Doha Bank deferred payments, and we have managed to support the mission. We also adopted in-house 5 Rs, supporting the small and medium-sized entrepreneurs through remedial management. It's important. Through the Qatar Development Bank, our recoveries and collections, we were focusing on those technically irregular accounts, rationalization, and revenue enhancement. We aimed at restructuring of the debt and remodeling the business are all integral part of the overall strategic drive from our perspective. Doha Bank as an institution was commenced in 1979 and listed in the Qatar Stock Exchange. Full branches in Qatar, UAE, Dubai, Abu Dhabi, India, and largest international network of representative offices, China, Hong Kong, Shanghai, again, Canada, Turkey, Singapore, Germany, Japan, United Kingdoms, South Korea, South Africa, again, Bangladesh, Australia, and Sri Lanka and Nepal. Brokerage financial services, we have an associate relationship. We have a 100% owned insurance company, formerly known as Doha Bank Assurance Company, now it's called Shirk. Client base of nearly 500,000, 23 domestic branches, 6 e-branches, pay offices, and over 88 ATMs. We are managing a good network. Our ratings are second to none, and Moody's and Fitch are rating A and stable outlook has been given by the Fitch, and we have growing aspirations to improve the ratings and take it further. The Doha Bank overview, if you look at it, total equity, total assets is around 13%. Net loans to total assets is around 63%. Net loans to total deposit is around, loan to deposit as I call it, 118%. Non-performing loan is around 5.98%. Cost of risk is around 2%. Cost to income is around 29%. Net interest margin is around 2.25%. And when it comes to risk-weighted assets, it's around 72 billion. CET1, 13.4, 13.04 I should say. When it comes to Tier 1, that's around 18.61. And total capital adequacy ratio is 19.75. That's commendable in substance. Now, the Doha Bank strategy, vision, mission, again, values and guiding principle. To be recognized as a bank of choice in Qatar, delivering superior shareholders. Vision missions are known to everyone, and we want to make sure they're all put into proper values. Vision, mission, and guiding principles are customer experience, empowerment and accountability, talent management, cost reductions, revenue enhancement, risk and capital management, digitization, automation, and accountability. Doha Bank is committed to environmental, social, governance, and sustainable practices, FTSE good practices, and again, MSCI ESG ratings, UN, we signed UN Global Compact. 20 years Doha Bank has been disclosing UNGC's and norms. We are adopting ourselves. We issue a governance report, we issue a sustainability report, as desired by the Qatar Exchange. We have distinguished business wholesale, which includes focus on corporate commercial banking, structured finance, public sector finance, and again, mortgage finance, real estate, trade, financing services, small and medium-sized entrepreneurs. Retail provides a wide range of products, transaction-based processing to individuals, including transactional loan, deposit, mortgages, remittances, priority banking, private banking, insurance, personal loans, and credit cards. International banking provides a range of products and services, including guarantees, letters of credit, risk mitigation and discounting products and risk participation in international trade, treasury investments, responsible activities such as foreign exchange, treasury products, and managing the bank's proprietary investment book, shock insurance. We have to work on various shock insurance products, and we have been in existence for the last 14 years, since 2007, and it's been a 100% owned company. Cross-selling, this is the biggest opportunity. Digitization transactions we have seen increase significantly. E-commerce growth has been prolific. Online payment gateways are there. Shift to digital is already happening. Innovative payment solutions are also happening in the marketplace. Online payment gateway, we have year on year over 40% growth, and we have reasons to believe that we will gain market share. Overall, if you look at it, it's around 6% of the total loans. Government is around 3%. Services around 5% of the market. Real estate 13%. Trade 8%. Retail 5%. And again, contract financing is around 14%. We have established credit highlights. If you look at it, well-established banking franchise, good brand, 42 years of existence, well-experienced executive management team, strong investment grading, and you have Qatar Exchange primary listing, Qatar Central Bank regulations, clear sustainability and digital strategy, and high-quality security portfolio comprising of mostly Qatar sovereign debt, solid capital position, and healthy liquidity buffers is very important. Now, when it comes to financial summary for last year, net interest income is around 3.7 billion, that is down by 10%. Interest expense is around 1.4 billion, that's down by 35%. Net interest income has grown to 2.3 billion, that is 17% growth. Fees and commission 304 million, foreign exchange 106 million. Again, income from investment securities 184 million. Net income from insurance activities around 3 million. Other income is around 20 million. When it comes to cost, 441 million is our staff cost, which is down by 11%, and non-staff cost has come down by 3.5%, that's around 426 million. Net impairment loss, net of recoveries, is around 1.4 billion, that is up by 27%. Net profit is around 703 million. In the challenging times like COVID, we reported 6.8% down. When it comes to balance sheet, total assets is around 103 billion, that is 4% down compared to the previous year. It's a deliberate attempt to shrink the balance sheet. And loans and advances 66 billion, investments 25 billion, customer deposits 55 billion, total equity 14 billion. Now, capital risk-weighted assets 71.9 billion, CET around 13.1, Tier 1, if you look at CET 13.4, I should say, CET Tier 1 is around 18.61, total capital ratio is around 19.75. These are the major highlights. Now, let's look at segment-wise. Corporate banking, overview of the corporate banking, a significant contributor for the banking operations. Evolved to be one of the competence of the bank. Targeted local and international companies, well diversified portfolio. For example, real estate is around 19.4 billion. We have given money in the real estate, and we have contract financing, which is now coming down. It's up to 5.5 billion. Trade is around 11 billion. Services around 9.9 billion. Real estate, contract financing, services are all important portfolios. Credit quality, if you look at it, we have 2020 NPL evolution is around 4.1 billion. 5.98% is a non-performing book, and total reserves is around 81%, including the risk reserves. So we have reasons to believe we are strengthening the balance sheet. Credit quality in Doha Bank's core business by geography. Real estate 1.3% is non-performing. corporate 11.3%, retail 5.9%, let's say 6%. Contract financing is around 11.3%, predominantly on the Gulf states. GCC is around 64% bad books. Qatar is around 2.69. India is around 2.37. Overall around 5.98. GCC branches showing significant high NPLs on account of the blockade. Before normalization, we had to provide. Normalization has taken place this year. Now we can get back in track with account the recoveries. High corporate and contracting NPL percentage mainly attributable to exposure to GCC branches, corporate and contract financing. So we have to work on improving the bank's risk profile. So what we are trying to do is to reduce the contract financing, focus on non-funded business, short-term multinational companies we are focusing on as well. So we are going to diversify our loan portfolio in the coming days. Now, if you look at the diversified loans and the deposits, retail is around 11% of the loan book out of 66. Now, government enterprise is around 17% and corporate is around 72%. The deposit side, savings is around 5%, current account is around 17%, and term deposit is around 78%. When it comes to splitting the deposits, corporate is around 37%, retail is around 23%, GRE, government related enterprises, is around 37%. When it comes to segment of the loan profile, government enterprise is around 17%, real estate is around 28%, trade is around 17%, service is around 15%, and retail is around 11%, and contract financing is around, it is coming down. Now we will be bringing down to less than 5% in the coming days. Non-banking finance is around 2.7%. Now investment book, again, well split. Amortized cost, we have taken it up. It is around 24.67 billion Qatar Riyal. Conservative investment philosophy. Predominantly we invested 78% of our books on State of Qatar bond. Other government securities around 20%. Mutual fund is negligible. Equities around 1.5%. Now, the average yield currently, if you look at the big picture, is around 3.78%, and we are going to look at objectively and see how to scale it up with the normalization of the relationship with the Gulf states as well. We have enough provision. Liquidity side, we are liquid. Loan to deposit ratio, the system is around 125, we are around 118. Net interest margin is around 2.25. Funding mix, if you look at it, customer deposits 53%, due to banks is around 22%, and equity is around 13%, other borrowings around 8%, other liabilities around 3%. So overall, if you look at it, is well spread. The capital ratios, which I already pointed out, is a major help for us, and we are having a sustainable performance in real terms to make sure the opportunity for investor is to recognize the worst is behind us. In most of the technically irregular accounts have been provided. Depending upon the overall recovery on the COVID side, we will be deciding on the provision numbers, and significant portion of the cross borders have been provided. Nearly 99% has been provided. Still, we have opportunity to go for legal recourse in majority of the cases, and we will be in a position to recover all this. Even last year, 400 million we recovered and we put it into additional provision. Effectively 1.8 billion is what the provision we made. In the profit and loss account we show as 1.4 because the entire money has gone to provision. We are not writing back to profit. So the big picture is investors have enough reasons to believe the earning capacity of the institution will move forward. Digital convergence, we are looking at it. De-risking the bank in multiple forms. 95% of the books are going to be in Qatar, and significant portion of our transaction-based processing is going to give customer value proposition, customer experience in the coming days, that will be a major ignition for us to gain market share. We conducted very many webinars last year. We're going to contact all the multinational companies who are coming for various projects, and we are going to put them in our customer profile to take it to next level. So please be confident. Here is an institution with sustainable vision and execution. We have been the trendsetter in terms of performance metrics. We paid the highest dividend up to 2017 in the Qatar exchange listed companies. We have been conserving our resources last 2 years. Now we will be augmenting additional momentum to perform better and better. Thank you, ladies and gentlemen, for your kind attention.